Hello, you are welcome once again to OA Accountancy Stuff. In today's video, we will be looking at the 3 or triple column cash book. But if you haven't subscribed to this channel, I will entreat you to kindly subscribe and also turn on the notification bell so that any moment we upload a new video, you will be notified. The 3 or triple column cash book is a cash book that has 3 columns for amount on both the debit or the receipt side as well as the credit or the payment side. So by this, we mean it is a cash book that has column for discount, cash and bank on both the debit side as well as the credit side. So the only distinction between this triple column cash book and the double column cash book is the discount. And discount is mainly categorized into two. We have trade discount and cash discount. Trade discount is the reduction of amount from the list of prices of goods and services. We mean that the allowance one enjoys whilst acquiring goods or services is termed as trade discount. So let's assume you went to acquire a 5 kilogram bag of rice and the listed price is 100 cedis, but you were offered a discount of, let's say, 5%. You're offered a discount of 5%. So instead of you paying the 100 cedis for the 5 kilogram bag of rice, you will have to take off 5% from the 100 cedis. So the 5% from 100 cedis will be 5 cedis. So you will now pay 95 cedis as the price for this 5 kilogram bag of rice. But one thing that you need to take note is that trade discount is not accounted for, or trade discounts are not recorded in accounting books. By this, we mean in recording this transaction, it is the 95 cedis, which is the net price, that will be recorded as the price for the 5 kilogram bag of rice. Instead of the 100 cedis, you will record the 95 cedis as the price for the 5 kilogram bag of rice. The cash discount, on the other hand, is also allowance given to customers in order to encourage them to make prompt payment. Assuming you went and acquired goods worth 1,000 cedis on credit from a supplier and you agreed to settle this amount in 30 days. You agreed to settle this amount in 30 days. But due to some circumstances, after the day 5, the supplier informed you that if you are able to settle this amount before day 15, you will enjoy a 5% discount. So if you are also able to go by the arrangements, then it means instead of you paying the 1,000 cedis as the amount you are owing to your supplier, you will take off the 5% discount. You take off the 5% discount given to you. So 5% of this 100,000 will give you 50 cedis. 50 cedis. So it means you will now pay 950 cedis as the amount you are owing to your supplier. So this 50 cedis is what is referred to as the cash discount. Cash discount. And cash discount is categorized into two. We have the cash discount received and cash discount allowed. Cash discount received is the one you received from your suppliers, and the cash discount allowed is the one you allow to your customers when paying their amount or account owing. So the discount received is on the credit side of the cash book, whilst the discount allowed is on the debit side of the cash book. So at the end of the accounting period, the total of the discount on the debit side of the cash book is transferred to the discount allowed account, whilst the total of the discount on the credit side of the cash book is transferred to the discount received account, or in the general or nominal ledger. So now, without wasting my time, let's quickly take a question on how to record accounting transactions in the 3-column cash book. But before then, we were told in our previous video that whenever a transaction affects both the debit column of the cash book and the credit column of the cash book, such a transaction is considered as a contra entry. So now let's go on with our question. The following transactions was extracted from the books of Fire for Fire Enterprise, a sole trader, for the month of June. On June 1st, balance brought forward: cash $10,000, bank $20,000. June 2nd, credit sales $70,000 to Danny. June 5th, received check from the following, in each case deducting 10% cash discount: Flake $10,000, Jenny $20,000 and Safo $90,000. June 7th, pay the following expenses by check: insurance $8,000, rent and rate $6,000 and electricity $3,000. June 10th, cash sales $15,000. June 12th, credit purchases $20,000 from Quao. June 13th, purchase goods worth $18,000 and enjoyed 10% trade discount. June 15th, pay the following accounts, in each case deducting 5% cash discount: Sammy $2,000, Scanty $3,000 and Cliff $5,000. June 17th, withdrew $50,000 from the bank account for business use. June 22nd, cash sales paid directly into the bank $1,500. June 24th, took $7,000 from the cash sale and deposited it into the bank account. June 26th, withdrew for personal use stock $7,000 and cash $6,000. So these are our transactions and we are required to record them in the triple column cash book. So now let's look at the format or the layout of the triple column cash book. But before then, we all know that in business, before you go on with your requirements, you need to state the books into which you are recording the transactions in. So in this question, all the transactions was extracted from the books of Fire for Fire Enterprise. So it means we need to write Fire for Fire Enterprise on top and our requirement is cash book. You can choose to bring triple column. Then you will neatly underline. So after this, as said in our previous video, every account has a debit side and a credit side. So we will divide this into two halves. This side is our debit side or the receipt side, and this side is the credit side or the payment side. So on each side we have date column. So let's create our date column on the debit side or the receipt side. So this is our date column, then we will neatly underline it. So this is our date column on the debit side. Right after the date column is the particulars. But as said earlier, the date column tells when the transaction took place. Right after the particulars is the ledger folio column, and that also tells the page number of the ledger the corresponding double entry can be found. Then after that you have the amount column. But as said earlier, the amount column is divided into three. So we have a column for discount, a column for cash, and a column for bank. Then we will bring the currency we are working in. So the question said dollars, US dollars. So we bring our US dollars. So on the credit side too, we have date, we have particulars, we have ledger folio, and then amount. So we have discount, cash, and bank. Then we will bring the currency sign right under each. Okay, so this is the format of a three-column cash book. So now let's start recording the transactions in it. The first transaction says that on June 1st, balance brought forward cash $10,000 and bank $20,000. We all know that cash and bank are all assets, and all assets have debit balance. So it means we will look at the debit side of the cash book and record these transactions on the debit side. But there can be a situation where the balance BD of the bank column of the cash book will be on the credit side. Whenever the balance BD of the bank column of the cash book is on the credit side of the cash book, then it means there is a bank overdraft. The balance BD of the cash column of the cash book can never be on the credit side because you cannot overspend more than what you have in your account. But due to availability of credit facilities, it is possible for you to overdraw or overspend more than you have in your account. So on June 1st, since all the transactions took place in June, we can write June on top. So June 1st balance, then the BD will be on the ledger folio column. So the cash is $10,000 and that of bank is $20,000. The next transaction also says that on June 2nd, credit sales $70,000 to Danny. As said earlier, Cashbook only records cash transactions, and when we say cash transactions, we mean transactions involving cash and bank or check. Credit transactions are not recorded in the Cashbook. But if we are required to open the ledger account for this transaction, then it means we would have opened the sales account and then the customer's account, because this transaction means we sold goods on credit to a customer called Danny. So it means we would have opened the sales account and then the customer's account. Then we will apply the rule, the double entry rule for recording in the personal account, because the customer is a personal account. The rule says that we should debit the receiver. So it means we would have debited the receiver, which is Danny's account, and then credited the sales account, because sales is a revenue. And the double entry rule for recording revenue says that we should credit all revenue, income, and gains. So the next transaction also says that on June 5th, receive check from the following, in each case deducting 10% cash discount. Flake $10,000, Jenny $20,000, and Safo $90,000. So this transaction also means that we received amount from our customers. So the accounts that are involved is the source of payment, which is the bank, because we receive it through check, and then the customer's account. And since we received the amount, we need to look at the receipt side or the debit side of the Cashbook, because the double entry rule for recording in the cash account and bank account says that we should debit all receipts and credit all payment. So it means we need to look at the receipt side or the debit side of the Cashbook and debit it with this amount. So it took place on June 5th. So we write 5 here, and the customer's name, first one is Flake. So we will bring Flake here. And the amount involved is $10,000. So it means Flake was supposed to pay $10,000, but Flake enjoyed a cash discount of 10%. So it means we need to take off the 10% from the $10,000, and 10% from 10,000 will give us $9,000. So let's record $9,000 on the bank column of the Cashbook, because we receive it through bank. So $9,000. And the corresponding account is the customer's account. So let's open Flake account. Let's assume we are required to do so. So let's open our Flake account. These are currency signs. Since Flake is the one that paid the amount to us, it means Flake is the giver. So we need to credit Flake account, because the rule says that we should debit the receiver and credit the giver. So we will credit Flake amount in the name of bank. So on June 5th, bank, $9,000. And the next one is the discount. Flake enjoyed a discount of $1,000. So we record a discount $1,000 on the discount column. So $1,000. And we will come back to Flake account and record $1,000 discount. So this is how the discount and the amount we received will be recorded in both accounts. So the next customer is Jenny. So in Jenny's case, Jenny was supposed to pay us $20,000, but Jenny also enjoyed a discount of 10%. So 10% of $20,000 will give us $2,000. So let's write our discount here, $2,000, and the remaining balance will be $18,000. The next customer is Safo. Safo also enjoyed a discount of 10%. So 10% of $90,000 will give us $9,000. So Safo enjoyed a discount of $9,000, and the remaining amount will be $81,000. So the next transaction also says that on June 7th, pay the following expenses by check: insurance $8,000, rent and rates $6,000, and electricity $3,000. So this transaction also means that we took amount from our bank account to pay for our expenses. So here, the accounts that are involved is the bank account and then the expenses account. Since we paid for the expenses, then it means we need to look at the payment side or the credit side of the Cashbook, and then we will credit the bank column of our Cashbook with these expenses. So it took place on June 7th. The first expenses is insurance, and we paid $8,000. The next expenses is rent, and rates. We paid $6,000, and the last expenses is electricity, and these two we paid $3,000. They all took place on June 7th. The next transaction is on June 10th, cash sales $15,000. So this transaction also means that we sold goods and received cash in returns. So since we received cash, then it means we need to look at the receipt side or the debit side of our cash book. And the two accounts involved here also is sales account and then cash account. Sales is a revenue, and the double entry rule for recording revenue says that we should credit all revenues, incomes, and gains. So it means we will debit the cash column of our cash book with the amount. So the amount involved is $15,000. And the corresponding account is sales. And this also took place on June 10th. So this June 5th. So the next transaction also says that on June 12th, credit purchases $20,000 from Qual. This transaction also means that we bought goods on credit from a supplier called Qual. But since the cash book only records cash transactions, this transaction will not be recorded in the cash book. But if we are required to open ledger accounts to record these transactions, the account that we would have opened is the purchases account and then the suppliers account. We would have debited the purchases account and credited the suppliers account because the supplier is the giver in this case, and then the purchases is an expenses. So the double entry rule for recording in the expenses says that you should debit all expenses, and the double entry rule for recording in the personal account says that you should credit the giver. So the next transaction also says that on June 13th, purchased goods worth $18,000 and enjoyed 10% trade discount. So this transaction also means that we bought goods with cash, but here we enjoy 10% trade discount. So since this transaction is a payment, then we need to look at the payment side or the credit side of our cash book. And the transaction involved cash. So we look at the cash column of our cash book. So it took place on June 13th. So this situation too, the two accounts that are involved is the purchase account and then the cash account. So we will credit the cash column of our cash book with the amount. But then we said earlier on that trade discounts are not recorded in accounting books. So it means we need to take off the 10% from the amount involved here. So 10% of $18,000 will give us $1,800. So we need to take off the $1,800 from the $18,000, and the remaining amount will be $16,200. So it is the $16,200 that will be recorded as the amount we paid for the goods we bought. So the next transaction also says that on June 15th, pay the following accounts, in each case deducting 5% cash discount. Sammy $2,000, County $3,000, and Cliff $5,000. So this transaction also means that we paid our suppliers and we received a discount of 5%. So since it is a payment, then we need to look at the credit side of our cash book. So here too, the accounts that are involved are the suppliers accounts and then the source of payment. So the source of payment here is our cash column or the cash account. So we look at the credit side of our cash book, and it took place on June 15th. The suppliers are Same, Scanty, and Cliff. June 15th. So we are supposed to pay $2,000 to Same, but we enjoyed a discount of 5%. So 5% of $2,000 will give us $100, and the remaining amount will be $1,900. So $1,900 is the actual amount we paid to Same. So we record the $1,900 on the cash column of our cash book. So 1,900. So here too, let's try and open an account for one of the suppliers. So let's open an account for Same. So this is Same's account. And since Same is the receiver in this case, Same's account will be debited. So June 15th, cash 1,900. Then we'll pass entry for the discount. So the discount involved here is 100. And we'll come back to Same's account and write discount 100. We were also supposed to pay $3,000 to Scanty, but we enjoyed a discount of 5%. So 5% of $3,000 will give us $150. So the discount here is $150, and the remaining amount will be $2,850. We were also supposed to pay $5,000 to Cliff, but also we enjoyed a discount of 5%. So 5% of $5,000 will give us $250. So the discount here is 250 and the remaining amount will be 4,750. So the next transaction also says that on June 17th, withdrew $50,000 from the bank account for business use. So this transaction also means that $50,000 was taken from the bank account of the business for business use. Whenever an amount is taken from the bank account of the business for business use, the account that received this amount is the cash account. So here it means we need to credit the bank column of our cash book and then debit the cash column of our cash book. So this also took place on June 17th. And we are saying that we will credit the bank column of our cash book with $50,000 and then in the name of cash. And then we will debit on June 17th. We will debit the cash column with $50,000 in the name of bank. And as said earlier on, whenever a transaction affects both the cash column of our cash book and the bank column of our cash book, such a transaction is considered as a contra entry. And a contra entry is represented by letter C. So you write letter C against the transaction on both sides. The next transaction is on June 22nd, cash sales paid directly into the bank 1,500. So this transaction also means that we sold goods for cash, but here the amount was paid directly into our bank account. So here the two accounts that are involved is the sales account and then our bank account. Since we received the amount for the goods we sold, then it means we need to look at the receipt side of our cash book because the rule says that we should debit all receipts and then credit all payments. So we will look at the receipt side or the debit side of our cash book and then we will debit the bank column with the amount involved. The corresponding account is the sales account. Since sales is a revenue, the double entry rule for recording revenue says that we should credit the sales account. So this took place on June 22nd. June 22nd, the corresponding account is sales account and the amount involved is 1,500. 1,500. The next transaction is on June 24th, took $7,000 from the cash till and deposited it into the bank account. So this transaction also means that $7,000 was taken from the cash account of the business and it was deposited into the bank account of the business. So this means we need to credit the cash column of our cash book and then we will debit the bank column of our cash book. So we are saying we will credit the cash column with 7,000 in the name of bank because bank is the corresponding account and it took place on June 24th. And then we will debit our bank column in the name of cash, June 24th. And we are saying whenever a transaction involves both the bank column and then the cash column, such a transaction is considered as a contra entry. And the contra entry is represented by letter C. So we write C against the transaction on both sides. The next transaction also says that on June 26th, withdrew for personal use stock $7,000 and cash $6,000. So here too, what it means is that the proprietor withdrew for personal use some stock and then cash. So whenever a proprietor or an owner withdraws an asset for personal use, the first account that needs to come in mind is the drawings account and the other one is the asset in question. So here, the first asset that was taken for personal use is the stock and stock are recorded in the purchases account. So it means you will debit the drawings account and then you credit the purchases account. The next asset that was taken for personal use is cash. So here too, it means you will debit the drawings account and then you will credit our cash column of our cash book. So let's pass entry for this transaction also. So on June 26th, we are saying that the stock drawing involves the drawings account and then the purchases account. So let's open our drawings account here. So let's take our drawings to be here. And then the purchases will be here. And we said that we will debit the drawings account with the amount involved. So on June 26th, purchases, because purchases the corresponding account. The amount involved is $7,000, and we will credit purchases account on June 26th with drawings 7,000 cedis. And that for the cash drawings too, we said the two accounts that are involved is the cash column of the cash book and then the drawings account. So we will debit the drawings account on June 26th. Drawings in the name of cash, $6,000, and we will come to the credit side of our cash book and we will credit the cash column with 6,000 in the name of drawings, June 26th. So this is how these transactions are recorded in the cash book. So now what's left is for us to balance off this cash book or this account. So in balancing off an account, we first need to ascertain the total debit entries of the account and that of the credit entries of the account. You close off both sides with a greater total. You find the difference between the two totals and put the difference on the side with a shortage. After that, that difference will be named as balance carried down, and that same difference will be sent to the opposite side after the totals, and it will be called balance brought down. So let's try and balance off our cash column first. So in balancing off our cash column of the cash book, we first need to ascertain the total debit entries. So the total debit entries of our cash column is $75,000. So let's dot it here, $75,000. And that of the credit entries amounted to $38,700. So let's try and write these two here, $38,700. So after ascertaining the total debit entries and that of the credit entries, then we need to close off both sides with a greater total. So the greater total among the two is the debit entries total, which is $75,000. So we will close off both sides. Let's roll a line here, $75,000, and we will come and roll a line here, $75,000. So after closing off both sides with a greater total, then we need to find the difference between the two total and put the difference on the side with a shortage. So the difference between the two is $36,300, and the side with the shortage is the credit side. So we will insert the difference on the credit side, $36,300, and that difference will be named as balance C/D, or balance carried down. This difference will be dated with the last day of the accounting period. So the last day of June is June 30th, because this is the closing balance in this current period. And this same difference will be sent to the opposite side here after the totals, and it will be called $36,300, and this same difference will be called balance brought down, and it will be dated as July 1st, because this will represent the opening balance in the next accounting period. So let's try and balance off our bank column also. So the total debit entries of our bank column is $136,500. So let's write it here, $136,500. And that of the credit entries also amounted to $68,000. So after ascertaining the total debit entries and that of the credit entries, let's find the difference between the two totals. But before then, we need to close off both sides with a greater total. So we will close off both sides with $136,500. $136,500. After closing all both sides with a greater total, then you will find the difference between the two total and put the difference on the side with a shortage. So the credit side is the side with a shortage, and the difference is $68,500. So you place the difference on the credit side, and this difference will be named as balance carried down. Since you're already having the name here, we won't write it again. So this same difference will be sent to the opposite side, and this is the opposite side after the total. So this same difference will be sent here, and it will be called balance brought down. So this is actually how account is balanced off. So what's left is the discount column, but we said earlier on that the discount on the debit side is called discount allowed, and then the discount on the credit side is called discount received. So discount allowed is an expenditure and discount received is a revenue. So it means we cannot close off both sides the same way we did for the cash and bank column. But said earlier on, the total of the discount on the debit side of the cash book will be transferred to the discount allowed account, whilst the total of the discount on the credit side will be transferred to the discount received account or in the nominal ledger. So let's try and close off this discount column. So the total for the discount on the debit side amounted to $12,000, and the total for the discount on the credit side is $500. So this is how these accounts are balanced off. So this will be the end of our triple column cash book. But if you are new to this channel, I will urge you to kindly subscribe and also turn on the notification bell so that any moment we upload a new video, you will be notified. Until we meet again, it is bye for now.